one. So if we show, the red inflation weighting here on the next slide, what we're plotting is the spread between shelter inflation and broader inflation. Positive spread, so red in the chart there means rent costs are growing at a premium to broader inflation, that's headline CPI. Negative spread, which is green in the chart, means the opposite. So you see we've had this protracted period of excess rent inflation.
By far the
cost
most
growth.
in this chart.
Right, and we had another higher high in the latest month. I think shelter inflation was at 3.4%, headline inflation was at 1%. So, up until recently, the last few months, rent and shelter inflation has almost singularly supported the headline and core numbers in CPI. You've seen you've seen some broader gains in recent months, but it's still, the primary support for what we're seeing in terms of inflation. So I guess it's kind of an ironic dynamic, right? Because the Fed has an inflation target, they're looking for 2%. Excess rental cost growth is the primary driver of accelerating inflation, and if we get to 2%, it'll be a big reason why. Rent inflation, shelter inflation is something like, I think it carries a 33% weight in the CPI basket. Yeah. So if that's running at a premium to broader inflation, and at that weighting, that's your primary driver. So if they hit their inflation target, ironically, that'll mean that consumers are actually in a worse position. A primary cost center is rising faster than both incomes and other inflation.
I never thought about it this way, but you should hit on this more. That's really interesting.
Yeah, and I mean, it's one of these
you have, of course.
We've had a hit on it, but it's this kind of cost push versus demand pull inflation, where these key cost centers, whether it's healthcare, whether it's shelter, or rent inflation, are growing at a premium to everything else. And it's just a tax on consumers, or at least share of wallet for other discretionary consumption.